A new lending rule will penalize home buyers with good credit scores while subsidizing home buyers with poor credit scores. A new federal rule going into effect May 1st will raise the monthly mortgage payments of buyers with better credit and higher down payments by anywhere between $40 and $60, while riskier borrowers will get more favorable terms because their fees will be reduced. Hi guys, my name is Josh Finigan with the Finigan Group here at eXp Realty, and today we're going to review the new federal housing policy and how it's going to affect you. The Federal Housing Financing Agency will make changes to the fees known as the loan level pricing adjustments on May 1st. This will affect mortgage origination at private banks across the nation, all the way from Wells Fargo up to JP Morgan and Chase. The result of these changes will be pricier mortgage payments for those of you who have higher credit scores and are planning to put more money down, which is really flipping the traditional mortgage process on its head. Under this new rule, higher credit buyers with scores between 680 and 780 will see a spike in their mortgage costs, with applicants planning to put 15 to 20% down seeing the biggest increase in their fees. Loan level price adjustments, or LLPAs, are upfront fees determined by your credit score and also how much money you put down. So here's how it normally works before this change. Let's say you go into a bank looking for a home loan. You have a 740 credit score and the bank says, hey, we'll lend you this money at a 6.75% interest rate. So let's say you have a credit score of 720, you go into that bank and the bank says, hey, we'll give you that same loan at 6.75, but we're gonna hit you with a loan level price adjustment of 20 basis points. Or for those home buyers with a 700 credit score, they'll still get that 6.75% interest rate, but they're gonna get hit with a loan level price adjustment of 40 basis points. So basically, the lower credit score you have, the bank looks at you as riskier, so they may charge you more points or fees up front. So obviously those numbers aren't exact numbers. It's simple math to kind of show you how these things usually work. Usually if you have a lower credit score or you're putting less money down, you are looked at as riskier, which means they're gonna charge you a higher interest rate or charge you more points up front. Now under the new LLPA pricing structure, a home buyer with a credit score of 740 looking to put between 15 and 20% down will get a surcharge of 1%, which is a 3/4% increase from the old 1/4%. For example, based on these new pricing structures, on a purchase of $400,000 with a 6% interest rate, home buyers can expect to see about an increase of $40 per month on their monthly mortgage payment. Meanwhile, home buyers with credit scores of 679 and lower will have their fees slashed, resulting in more favorable mortgage rates. For example, a homebuyer planning on putting 5% or less down with a 620 credit score will get a fee discount of 1.75%. When you absorb that into the long-term mortgage rate, it equates to about a 0.4 to 0.5% discount. These new rules effective May 1st will affect everything from refinances to home purchases, but they only affect loans with terms longer than 15 years. So if you are looking for a 15-year loan, you don't have to worry about any of this. So this new rule is really turning things upside down. It's penalizing those home buyers that have better credit and more down payment to subsidize those home buyers with lower credit and less down payment, the riskier buyers. These fee structure changes are the latest of several moves by the FHFA aimed at boosting affordability for what the agency calls its mission borrowers, defined as first-time home buyers, low-income borrowers, or those from underserved parts of the community. Ian Wright, a senior loan officer at Bay Equity Home Loans, says, "These changes don't make sense. Penalizing borrowers with larger down payments and credit scores will not go over well. Confusing borrowers is never a good thing." Which this makes sense. Those home buyers out there that have been saving and saving and saving to put 15 to 20% down to get better terms and a better rate will be surprised when they're actually penalized for that. The president of the National Association of Realtors, Kenny Parcel, also weighs in and says, "In the wake of a 3% increase in mortgage rates, now is not the time to raise fees on any home buyers." The FHFA director, Sandra Thomas, says that overall these fees are minimal, which I have to say I don't fully agree with her. Home buyer affordability has been at all-time lows this year. Right now, every little bit counts, and this won't just affect the wealthy, this will affect first-time home buyers and the middle class as well. Overall, lower credit score homebuyers will still pay more LLPA fees than higher credit score buyers. The gap is just closed even closer. And this new change will help a lot of low income and low credit score home buyers actually purchase a home. And when you look at it, the average net worth of a home buyer in the United States is $255,000 compared to the average net worth of a renter, only $6,300. So there's definitely a huge discrepancy there. So on one side, this will help many low-income buyers take advantage of the wealth-building tool of home ownership, but on the other side, it seems like the administration is rewarding poor financial decisions. I, for one, think one of the biggest issues is the poor financial education that we see all across the board starting at a young age. And this seems to be a little bit more of a band-aid than something that actually gets down to the root of the problem. Honestly, I feel this is all a little bit backwards, but hey, what are you gonna do? Nobody asks me, but I'll ask you. I'd love to hear from you guys. Comment below with your thoughts on this new rule change. And if you want to make sure you stay up to date on everything going on here in our backyard and also what's going on in the real estate market, make sure you scan this QR code and sign up for our weekly newsletter so you never miss another video. And if you are looking to buy, sell, or invest in real estate, myself and my team would love to be your real estate resource of choice. So feel free to give us a call, text us, or email us. We'd love to sit down with you and see what we could do to help you make that move. Thank you so much for watching. I'll catch you in the next video.